Welcome. In this video, how much can we earn if XCN becomes $1? We will analyze it. Don't forget to subscribe, like, and please watch to the end to understand.
When we talk about the existence of a downtrend in a financial instrument, we are essentially acknowledging that sellers have been the dominant force on price for an extended period. A downtrend line is one of the most fundamental building blocks of technical analysis and is formed when the price consistently makes lower highs and lower lows. For investors, this line indicates that market psychology is on the side of the sellers, because even when the price manages to recover slightly, it fails to surpass previous levels and once again faces selling pressure. This situation is considered a sign that the market will continue its downward movement for a certain period. However, a break of this trend generally signals a significant change in market psychology. It shows that the dominance of sellers has ended and buyers are beginning to take the stage. For investors, this break is often interpreted as an attack, in other words, the beginning of a new upward movement. Downtrend breakouts are among the most closely watched signals in technical analysis, because once the price that has been moving in a certain direction for a long time breaks this line, it strongly announces that the balance of the market has shifted. This is important not only technically, but also psychologically. When an asset moves consistently within a certain trend, most investors assume that the trend will continue. Therefore, the break of a downtrend means the disruption of expectations and the beginning of a new cycle of belief. At this point, investors who were previously selling may start to close their positions, those waiting on the sidelines may see it as a buying opportunity, and those already buying may gain confidence and increase their positions. The combination of all these behaviors accelerates the price even further, and we observe this as an attack, a sharp upward movement. When a downtrend is broken, the first effects on the market are often filled with short-term hesitation, because no breakout in technical analysis carries 100% certainty. However, if the breakout is supported by volume, this becomes the strongest confirmation that the move is real. If the price breaks above the downtrend line while there is a noticeable increase in trading volume, it shows that investors are moving collectively. This collective move allows the market to gain upward momentum and greatly increases the probability that the price will continue rising for some time. In addition, the broken trend line may later act as support for the price. That is, after the upward movement begins, if the price pulls back, the trend line that previously acted as resistance may now act as support and help the price turn upward again. The most important aspect of downtrend breakouts is the deep change they create in investor expectations. If the market has seen each rally followed by renewed selling pressure for a long time, this psychology becomes ingrained. But once the trend is broken, this cycle is disrupted. Buyers now feel stronger, while sellers are no longer as confident. This change creates a chain reaction in price movements. Because when the majority of market participants begin to think in the same direction about the future of the price, that belief feeds itself through actual transactions. Those expecting the price to rise buy. Those who buy push the price higher, and as the price rises, new investors join the move. This loop plays a critical role in the construction of an uptrend. When a downtrend is broken, the first effects on the market are often filled with short-term hesitation, because no breakout in technical analysis carries 100% certainty. However, if the breakout is supported by volume, this becomes the strongest confirmation that the move is real. If the price breaks above the downtrend line, while there is a noticeable increase in trading volume, it shows that investors are moving collectively. This collective move allows the market to gain upward momentum and greatly increases the probability that the price will continue rising for some time. In addition, the broken trend line may later act as support for the price. That is, after the upward movement begins, if the price pulls back, the trend line that previously acted as resistance may now act as support and help the price turn upward again. The most important aspect of downtrend breakouts is the deep change they create in investor expectations. If the market has seen each rally followed by renewed selling pressure for a long time, this psychology becomes ingrained. But once the trend is broken, this cycle is disrupted. Buyers now feel stronger, while sellers are no longer as confident. This change creates a chain reaction in price movements, because when the majority of market participants begin to think in the same direction about the future of the price, that belief feeds itself through actual transactions. Those expecting the price to rise buy. Those who buy push the price higher, and as the price rises, new investors join the move. This loop plays a critical role in the construction of an uptrend.
When a downtrend is broken, the attack that follows usually progresses towards certain technical targets. These targets are often past resistance levels, Fibonacci retracement levels, or formation targets. For example, when the price breaks a downtrend formed over a long period, the first target is usually the previous highs. Because these are levels where sellers previously drove the market down, it is expected that they will be retested. However, if the price breaks through these levels as well, with volume support, the upward movement opens up much further, and a much stronger uptrend may emerge. At this point, the investor emotions also reshape. Those who were hopeless during the previous decline regain optimism with the breakout. This creates a positive energy in the market and supports price movement. Psychologically, downtrend breakouts are one of the most important factors in changing collective investor behavior. Because the market is not just numbers, but the emotions of thousands or even millions of investors behind those numbers. During a downtrend, fear and insecurity dominate the market. But with the breakout, these fears begin to fade. People see that instead of moving to lower levels, prices can now rise. This strengthens confidence. As confidence grows, new buyers join the market. Thus, both technically and psychologically, a powerful transformation occurs. This transformation makes it easier for the price to continue rising and sometimes opens the door to a major bull market. In conclusion, downtrend breakouts are not merely the surpassing of a simple line. They signify that the supply-demand balance in the market has changed, sellers have lost control, and buyers have begun to take the stage. Therefore, the attack that begins when a trend is broken is not only a technical move, but also a psychological revolution. This revolution can lead to long-term rallies. That's why investors interested in technical analysis should closely follow downtrend breakouts, watch for volume confirmation, and know how to evaluate the opportunities that arise. A trend break can be the beginning of a new cycle, and this beginning can hold life-changing opportunities for investors. But we can't make decisions based on only trends, so let's take a look at other metrics as well. Stay tuned.
The descending wedge pattern is one of the most common formations in technical analysis, and one that investors follow with hope, because this structure often signals a consolidation period, a gradual decrease in market pressure, and then a strong upward movement. Especially when the price moves within the descending wedge in an increasingly narrow structure, it shows that the balance between buyers and sellers is about to break. One of the most important details to pay attention to in such formations is the upper line of the wedge, because although the price seems to be moving downward within the wedge with fluctuations, the strong buying pressure coming from below is actually preparing to push the price higher. Therefore, when the price breaks this upper line, it creates an effect like breaking a chain in the market and heralds the beginning of a new rally. A descending wedge forms in a downtrend when the price makes lower lows and lower highs each time. But if observed carefully, the angle of the lows is steeper while the angle of the highs is more horizontal. This is actually a sign that sellers are gradually losing strength. At the beginning, sellers push the price down sharply, but over time, this pressure weakens and buyers start to meet the price at higher levels. Thus, the wedge narrows and the price consolidates. The final point of this consolidation is one of the moments investors pay the most attention to, because when the price breaks the upper line, this breakout can signal not only a short-term move, but also the beginning of a strong medium and long-term rally. When we consider the psychological side of the formation, a very important picture also emerges. Investors trading within a descending wedge usually act with uncertainty. Since the price is constantly tightening downward, a pessimistic atmosphere dominates the market. However, during this time, smart investors, especially large players, know that the breakout will be upward and gradually accumulate positions. In other words, the descending wedge both discourages small investors while at the same time providing advantageous buying zones for larger investors. Therefore, when the price breaks the upper line, it does not only mean that a technical level has been breached, but also that the overall sentiment in the market has completely shifted. The pessimistic mood turns into optimism, and with volume, this leads to the start of a very strong rally. The breakout of the wedge's upper line is most often accompanied by an increase in volume. Volume growth is the most important factor confirming that the breakout is real and sustainable. If the price breaks the upper line while volume also increases strongly, this shows that new energy has entered the market. Because this breakout attracts not only investors who understand technical analysis, but also all market participants who follow the trend. Thus, a domino effect occurs. First, short-term investors start buying, then medium-term investors join the movement, and finally, long-term investors also realize the trend has changed and begin to buy. This chain reaction causes the price to make a very strong upward move. From a technical standpoint, the target of the descending wedge is usually equal to the height of the widest part of the wedge. That is, when the price breaks the upper line, a rise of at least this height is expected. However, most of the time, the price not only reaches this minimum target, but also aims for even stronger levels. Because a descending wedge breakout is one of the most reliable formations indicating a trend reversal. It can signal not only a short-term rise, but also the beginning of a longer-lasting trend change. Therefore, when the price breaks the upper line, a strong bullish expectation emerges in the market. At this point, the most important thing investors should do is to patiently wait for the breakout. Since the price constantly moves downward within the descending wedge, investors who enter early often lose money, out of impatience. The correct strategy, however, is to wait for the breakout and volume confirmation before taking a position. When the breakout happens, it offers not only a technical opportunity, but also a safe buying zone. Because breaking the upper line shows that sellers have completely lost their power and buyers have taken control. This means the rise will be more sustainable. Another important point is that after the breakout, the price often pulls back to retest the upper line. That is, the price breaks the upper line, rises for a while, then pulls back to test the broken line as support. This move is the market's way of taking a breath for a healthy rally. If the price continues upward again after this test, it is a sign that the rise will be much stronger. That is why post-breakout retests also provide important opportunities for investors. In conclusion, the breakout of the descending wedge's upper line.
Let's assume you have 100,000 XCN, and when we examine the future price movements of this cryptocurrency, one of the most exciting scenarios is the price reaching $1. In that case, the situation becomes clear mathematically. If each of your 100,000 XCN is traded at $1, this means you would reach a total value of $100,000. In other words, while the amount of tokens you hold remains the same, the increase in price directly multiplies the value of your assets. The key point here is how cryptocurrencies can offer investors such large profit opportunities. Because in many cases, during major market rallies, prices reaching psychological and technically important levels like $1 bring strong momentum with them. Especially these round numbers, which are in every investor's sight, often act as turning points. If we analyze this more deeply, the value of your 100,000 XCN reaching $1 is not only about your personal account growing, but also about the increase in market capitalization. The market cap of a cryptocurrency is the product of its total supply and its price. Therefore, when XCN reaches $1, the project gains significant credibility in the eyes of investors and attracts the attention of wider audiences. What's important here is that your 100,000 XCN investment suddenly makes a major financial leap. Tokens that were accumulated at much lower prices multiply in value as the price rises. From the perspective of investor psychology, such a scenario not only provides financial gain but also a sense of achievement. The price reaching $1 is not just a mathematical transformation. It also shows how much the market trusts that coin, how much the project has developed, and where investors' expectations stand. Having your 100,000 XCN worth $1 each could be one of the brightest moments in your personal investment journey. Such growth is often connected not only to the rise in price itself, but also to the strengthening of the overall market trend. For many investors, XCN reaching $1 could indicate that the project has entered a maturity phase, gained more visibility on major exchanges, and is strongly supported by the community. Looking at it from a broader perspective, your 100,000 XCN reaching $1 would be equivalent to building a small fortune in the investment world. A capital of $100,000 could give you financial freedom and open the door to new investment opportunities. This gain is not only about the price increase itself, but also represents the reward of taking risks and being patient. The greatest motivation for long-term crypto investors lies precisely here. One day the price goes much higher than expected, and their holdings grow massively in value. Another important point is the chain reaction that can occur after the price reaches $1. In the crypto market, breaking a certain level attracts more investor interest, which brings additional demand. When the price hits $1, social media, news outlets, and market analysts will highlight it. This may draw in new investors to the project. Therefore, your 100,000 XCN could gain even more potential value, not just mathematically, but also through the psychological strength of the market. Reaching the $1 mark could even be the beginning of a new rally. From a profit perspective, if we turn this scenario from a dream into a concrete calculation, when your 100,000 XCN reach $1, you end up with $100,000. This becomes possible thanks to coins purchased at much lower costs appreciating over time. Transformations like this are quite common in the crypto market. Many coins that were once worth only a few cents eventually reached $1 and beyond, delivering huge profits to investors. You could be among these examples. It's worth emphasizing this reality. Reaching $100,000 in assets is not just a numerical success, but also the result of investment discipline, because such large gains usually come after a patient wait. Many investors tend to sell their holdings too early, missing out on bigger opportunities. But holding 100,000 XCN until the price reaches $1 would represent both financial gain and strategic success. One of the most exciting aspects of such a scenario is this. When you reach $100,000, you could either use that capital to move into different investments or strengthen your financial independence. That figure could open many doors for you. This is the greatest allure of cryptocurrencies. A small initial investment combined with patience and being in the right place at the right time can turn into massive profits. That's why the $1 level can be seen not just as a price target, but also as a symbol of financial freedom. From another angle, reaching $1 also means overcoming a psychological threshold. For investors, such round numbers carry great importance. Going from $0.10 to $0.50 is a big increase, but reaching $1 has a much stronger symbolic meaning. Your 100,000 XCN hitting that level not only boosts your financial wealth, but also increases your confidence in the future. That confidence allows you to take firmer steps in your next investment decisions. Finally, it should not be forgotten that your 100,000 XCN reaching $1 is not limited to your personal gain. This milestone also marks a turning point for the entire community, because a coin that reaches such a level becomes more widely known in global markets and attracts the attention of larger investors. Thus, your gain would also be supported by the project's growth and a stronger future. A profit of $100,000 is not impossible in the crypto world, and many investors aim to seize such an opportunity at least once in their lifetime.
Yes, friends, I hope you liked the video. If you subscribe to my channel and like the video, more videos will be coming. Be careful in your investments, analyze the risks correctly, and always take strategic steps. I will be with you with different analyses, investment opportunities, and technical information in my videos. I wish you all a lot of profit. See you soon.